What if I tell you that the biggest mistake most new option traders make has nothing to do with strategy charts or indicators? It is a mistake I made for years and it costed me potential returns without me even realizing it. Welcome to another video by the Option School. This is your friend Pradeep Singhal. Let us talk about another smart way of trading. What is the mistake? Mistake is keeping 100% cash in your trading account. It is like wasting your assets which could be used to generate sort of effortless returns. What is the solution to this? Let me talk about the solution, and in this video I will show you what can be one of the best solutions. There can be many other solutions, but this one suited me the most. I am assuming an account worth 20 lakh rupees. It is just a symbolic number. Amount can be anything like 2 lakhs, 10 lakhs, 20 lakhs, 40 lakhs, or whatever. So let us see what is the method. So we need to allocate 20 lakh rupees in such a way that we are making full use of our capital. This method will help you optimize your capital and can make potential returns even when you are not actively trading. In the end, we will also see the comparison on how much difference it can bring to your account. So stick around, as this one thing can completely change how you are going to manage your funds. Let us say you have a fund of around rupees 20 lakhs. Instead of using all cash, divide it into two parts. And I will explain why we are dividing it to two equal parts of 10 lakhs each. For 10 lakh rupees, we should invest in Nifty ETF. It can be Nifty Bs, it can be SBI ETF or any Nifty ETF. And the second 10 lakh should go to liquid funds. Liquid funds like liquid case is there, liquid Bs is there, or any other liquid fund which is suitable to you. Now, once this is done, let us see how much difference it will bring to your account. Now, both the purchases, now in this case what we have said, we have taken a total 20 lakh rupees. 10 lakhs is invested in ETF, Nifty ETF, 10 lakhs in liquid Bs. Both the purchases should be pledged and you will receive more than 90% as margin. Most of the brokers give you 94% as margin, but here I am assuming that okay, they will give 90% as margin and there will be no interest or anything charged on this. So for Nifty ETF, you will get 9 lakh rupees as margin. For liquid Bs also, you will get 9 lakh rupees as margin. Your total margin available will be 18 lakhs. Nifty ETF in long term, we expect that okay, it will give 12% annual returns, and hence I have added 1.2L as annual return. 1.2 lakhs on 10 lakhs is 12%. It may not happen in short term, but yes, long term we have seen it gives more than 12% return. So this 1.2L is my annual return in long term. And liquid Bs also give you something close to 4 to 5%. For easier calculation, I have taken it as 5%. So 5% of 10 lakh will be 0.5L. So if you add both the things, you are getting 1.7L. 1.7L on 20 lakhs is already around 8.5%, right? So 8.5% returns you are getting, and you are getting this 18 lakh rupees as a margin to trade in your options trade. Now, why 50-50 allocation? Because to use your Nifty pledge margin of 9 lakh, you need cash or cash equivalent of 9 lakhs. So that is why we have parked 50% fund in liquid fund. So whatever fund we have in liquid fund, once you pledge it, it is treated as cash equivalent. So now you can use the full 18 lakh rupees as margin for trading your options. Now in your options trading, let us say we produce only 1% per month, which is most conservative. And so 12% in a year, 12% of 18 lakhs brings me another 2.16 lakhs. Now this 18 lakhs is whatever margin we have got. So the total we will receive is around 3.86 lakhs over a fund of 20 lakhs annually. Now this may vary depending upon your skills as a option trader. This may vary. This is not a guaranteed return, but yes, this is the expected return. So 3.86% straightway says that okay, now you are earning around 19.3% annually on your overall capital. Now if I compare it with pure cash, let us see what happens. If you're trading purely in cash, your fund value is 20 lakhs, your returns are again, let's say 12%. So net return is 2.4 lakhs. Vis-a-vis, if you invest in two ETFs, your net return is 3.86 lakhs. It is 12% versus 19.3%, 7% difference. Again, I will say it may change from year to year, but then it will always be better than trading purely in cash. By parking my money in two different instruments, I am gaining a huge additional return, which in some years, obviously in some years, it can be more than your actual active trading returns. Secondly, in case market gives abnormal returns over few years, as we have seen in past few years, if Nifty gives abnormal returns, as an option trader, I will not capture that. I will be capturing just my option returns. But in case I have used ETF to use my to do my option trading, I will also be able to capture the high growth returns in case Nifty is giving that, right? So small changes can bring big difference in results. Hope you understand and the logic and found this information useful. Check your trading account right now and do let me know in the comments what percentage of your capital is idle cash as of now. So please like this video, subscribe to the channel and press the bell icon. See you in the next video. Bye.